A very warm good morning to one and all present here. We welcome you all to this online seminar. It is my privilege to introduce our speaker for the day, Mr. Sandeep Singh. Sir is a seasoned finance and insolvency professional with a diverse background spanning e-commerce, consultancy, auditing, and taxation across multiple functions and cities. A fellow member of the Institute of Cost Accountants of India. Sir brings over a decade of rich experience in financial management, regulatory compliance, and strategic advisory. He is a registered insolvency professional with the Insolvency and Bankruptcy Board of India since April 30th, 2024. And currently, Sir serves in a full-time advisory role at Sumida Management Solutions Private Limited, a recognized insolvency professional entity. Sir has demonstrated hands-on expertise in drafting resolution plans and representing stakeholders in negotiations, ensuring adherence to IBPI regulatory compliances, appearing before the Honorable NCLT and preparing legal documentations, filling progress reports, and managing MCA-related filings, etc. We welcome you to the session, sir. And before we proceed, just a few announcements for the students. So the attendance link, the link for the form is already shared on LMS and it will be active from 8:30 onwards. And also in the last 15 minutes, it will be shared on the comment section. So students are requested to fill up their attendance using the link. Thank you and over to you, sir.
Thank you so much, madam, for a warm welcome. And
Sir,
before I
you're not
start the,
audible, sir. Kindly unmute yourself.
can you hear me? Hello?
Sir, you're still not audible.
Just a second.
Thank you and over to you, sir.
Thank you so much, madam, for
Sir,
before I start the.
sir,
Good morning. Can
sir,
you hear me?
kindly unmute yourself. Kindly unmute yourself.
Just a second. Just a second. Good morning. Is it audible now? Just a second.
So you can start with the session, sir. Please go ahead.
All right. First of all, thank you for a warm welcome, madam. And before I start the session, I would like to thank the officials of St. Xavier's College for giving me this opportunity. And a small introduction about myself. Can I share the screen? Whether my screen is visible? I hope my screen is visible. Good morning, everyone. First of all, thank you for St. Xavier's College, Kolkata, for inviting me. I'm Sandeep Singh, an insolvency professional. Today, we are going to dive deep into the most powerful reforms in India, the Insolvency and Bankruptcy Code, or IBC. Now, before I start the session, let me ask my friends, how many of you have heard about IBC before? Friends, I really want this session to be interactive. I don't want, just to speak from my end and you would listen. If you can share your response on the chat box. All right. So what we will do at the end of the session, you should be able to understand what this IBC is all about. Number one. Number two, what is corporate revival? Number three, this moratorium under Insolvency and Bankruptcy Code. Number four, the corporate insolvency resolution process, right? Number five, career path.
So the chat box has been disabled, sir.
All right, they'll not be able to answer to my questions, right?
Number two, what is number?
Hello? career path for the students, and I'll also take two real life case studies. Friend, it's important to understand why IBC was introduced. The IBC, Insolvency and Bankruptcy Code, was introduced in 2016. Today, we are about to complete 9 odd years. Why? Why this reform was introduced in India? So I'll just share one example. So this started because of the NPA, the banking industry. The banking industry had too much of NPAs, right? So in order to reduce the loss of the company, loss of the bank, so this code was introduced. So this is a result of a small comparison of NPA. You would see that in 2016, 2017, and 2018, the NPA was around 11.2%, right? Around. And after that, with the implementation of this IBC, this NPA over a period of 7, 8 years has come down to 2.3% now in 2025. This is the provisional figure for 2025. So before IBC, what was there? Before IBC, SurfaceE Act was there. Under SurfaceE, what used to happen? The bankers used to disburse loan to the corporate entity, right? And they were able to invoke the corporate guarantee and recover their money. But the recovery took a lot amount of time. It wasn't easy for the bankers to recover their money, right? Hence, this IBC code was introduced. What happens with this IBC? I'll go through step by step process of this IBC and why this is important. IBC is like, you take care of the sick companies. If a company is sick, in order to revive the company, this IBC code was introduced. So what happens with this IBC and how this IBC triggers? So, say for example, I'll give you an example. Today, Reliance, Mukesh Ambani is the chairman of Reliance, right? We all know. If Reliance goes into insolvency, an insolvency professional like us will become the CEO of the company, will take the place of Mukesh Ambani, and the powers and the position of Mukesh Ambani, all the powers will be vested with an insolvency professional, right? And what will be our duty? Our duty will be to revive the company, to revive the corporate entity, right? So I'll go step by step process of the IBC. So this slide talks about why insolvency professionals are needed. So like doctors take care of the patients, right? So insolvency professional take care of the sick companies. So as I said earlier, the pre-IBC challenges before 2016, debt recovery often took 5 to 10 years recovery with multiple forums like SurfaceE, DRT, etc. IBC professional is the backbone. Insolvency professional as a doctors for sick companies, taking control, preserving value, and enabling resolution. As I said, if a company goes into insolvency, so insolvency professional become the post de facto CE of a company, right? So currently in India, there are around 4,500 insolvency professionals only. Out of this 4,500 insolvency professional, only 2,200 are the active insolvency professional. So this is a great opportunity for you people, for the students. You can think about this career in the days to come. I'll talk about how you can become an insolvency professional, right? So this is the corporate insolvency resolution process, how it triggers. Friend, this slide will talk about how it triggers. So first of all, a company, in order to take a company to the insolvency proceedings, there has to be a debt and default, right? And what is the threshold limit? The threshold limit for a company is 1 crore rupees. If a bank or any of the operational creditor, we call bankers as a financial creditor, and other operational creditors are those creditors who supplies money or the goods to a company, right? And in order to take a company to the insolvency proceeding, the minimum threshold amount has to be 1 crore. If there is a default of 1 crore, a bank or a corporate or a operational creator can take that company, say Reliance, to a insolvency proceeding. So what is the process? I'll go to
Excuse me, sir. Sorry to interrupt. Sir, can you please switch your PPT to full screen?
uh, uh, just a second. Hmm. Just a second. I'm just trying. I'm just finding the. Is it better now?
Sir, if you could just go to the top slideshow section
Yeah.
and switch to the full screen slideshow, and from the current slide, you'll get that option to. Yes, so it is better on the right side if you can close this share thing.
Is it better? Madam, can you just
So it's
confirm?
better now. It's better. Please go ahead.
All right. Thank you. So what happens, as I said, that in order to take a company to the corporate insolvency resolution process, a debt and default is required to be there, right? And what is the threshold limit? A threshold limit of 1 crore is required. So once a company default its payment to a banker or an operational creditor, so the banker has to file an application before the Honorable NCLT, National Company Law Tribunal. So, under Section 7 of the Insolvency and Bankruptcy Code, or Section 8 or 9, if there is an operational creditor. So, what happens once an application is filed? So, once an application is filed, the Honorable NCLT hears from both the party, bankers, the applicant, and the respondent. And after that, what happens if the case gets admitted? So, an insolvency professional gets appointed, like us, as an IRP, interim resolution professional, we call it, right? And we become the CEO, post de facto CEO of a company, of that company. So all the powers and the position of the CEO become vested with an insolvency professional, right? Yeah, this is a application as and admission, as I said, appointment of IRP and COC. So what happens once the appointment of an insolvency professional takes place? He forms a committee of creditors. So who all are there a part of the committee of creditors? The bankers or the claimant becomes a part of the committee of creditors, right? And they will decide how the company will go, how the company will function, etc. So what is the intent of an insolvency professional? The intent of an insolvency professional is to revive the company, right? Revive the company and then sell the company, because there is no such intent to liquidate the company. If the company goes into liquidation, then it will impact the economy, it will impact the employment, etc. So every step for an insolvency professional or the committee of creditor is to revive the company. So how we can revive the company? Any questions as of now? All right, I'll just talk about step by step process, right? So once the company goes into CIRP, so what we do, we we ask the investors.
Sir,
Yeah.
am I audible to you?
Yes, madam.
So actually, we are not planning to keep it interactive right now
Okay,
because, as you understand, checking the chat box is a problem.
correct.
So we are going to keep it uh, entirely entirely moderated. However, in the last 15 minutes, maybe we will allow for some interaction.
All right, no problem, madam.
Thank you
Thank
so
you.
much.
So what happens when a company goes into insolvency? So the intent of a resolution professional IRP, he invites application for an investor to share their application to take over the company. How they can take over a company? Say for example, uh, if there is a sick company, the other company can take over a company by submitting the resolution plan. A resolution plan is a blueprint. Say, for example, if Tata Steel goes into bankruptcy, insolvency, right, CIP process. So, if Reliance would like to buy this company, so Reliance has to submit the resolution plan. And what does this resolution plan will cover? The resolution plan will cover the entire blueprint, at what price this company will be purchased, what is their price at which uh, Reliance is eager to purchase this company, how this company will take over, how this company will function maybe in the years to come, 2 years, 5 years, etc. And first of all, Reliance has to address what made this company, Tata, went into insolvency proceeding, right? So this resolution plan is a complete blueprint how this company will function in the days to come. And say, for example, if there is a debt of 500 crore rupees, out of this 500 crore rupees, it's the total payable amount, right, of the corporate data. So if I'm going to buy this company, I need to submit a plan. Out of this 500 crore, I can submit a plan for say 300 crores also. But out of this 300 crore, I'll have to explain how much amount will go to each creditor. So there are certain rules and regulations laid down in the IBC code which we need to follow. So certain percentage of payment is required to be done to the operational creditor, financial creditor, employees, etc. So, and what is the timeline? The timeline to revive this corporate insolvency resolution process is 180 days only. So, within a period of 180 days, this has to be revived. If there is no revival within a period of 180 days, then extra again, 90 days and 60 days can be short for extension. But think about a case when there are no buyer, or the buyer is there, but the amount which they are proposing does not feed the expectation of the creditor, committee of creditor, then this company will go into liquidation, right? I'll give an example of liquidation. Go Airways. Airways went into corporate insolvency resolution process in 2023. But as of as on date, there are no buyer. Hence, the company went into liquidation in January 2025. All right. So what happens when a company goes into insolvency, CRP process? A moratorium takes place under Section 14. What is moratorium? We all know when a company becomes sick, a lot of pressures takes place either on the directors of a company, and they are unable to revive the company, run the company. So once the moratorium CRP takes place, moratorium gets enacted for the total CRP period. So what happens during moratorium? The other claimant, or there should not be any suit or legal cases can be filed against the company, right? So there is some sort of protection by the government, so that the RP, resolution professional, or the insolvency interim resolution professional has an opportunity to revive the company. As I said, that this moratorium is applicable only on the corporate data, not on the directors of the company, right? What happens when a moratorium takes place? As I said now, again, Section 65 talks about protections against false claims. Say, for example, if a company goes into insolvency proceedings, you would find in the market a lot of directors are there who take this company to the insolvency proceeding. Why? Say, for example, I have taken a loan from the bank of 1000 crore rupees. And my intent is to revive this company. As I've taken the loan from the bank of 1000 crore rupees, and I want to siphon this loan amount, right? I'll take this company into insolvency and will settle this company's loan, say, for example, for 200 crore rupees. So there is a profit of 800 crore rupees, right? So if there is any malicious function, malicious intent of the corporate data or the directors of the corporate data, then there is a penalty under section 65 of the Insolvency and Bankruptcy Code. Section 32A of the Insolvency and Bankruptcy Code talks about clean slate for companies. If the company is sick, say for example, a lot of litigations are there against the corporate data. Litigations as in income tax has sent a due, GST has sent a due, right? And if I'm going to buy a company, I'm a new buyer, right? If I am going to buy a company, so I would not want to take care of all those burdens, right? Say for example, if I'm buying a car, a old car, from any one of you, right? And if there are certain fines, I'm giving you an example, a small example just to help you understand. So I'm buying a old car from you, right? There could be some sort of fine by the traffic department, right? So that fine will not take care, will not be a burden for me. I will get the company as a clean slate. All the past incident of the corporate data will be clean, so I can run the company as a clean and there will not be any sort of burden on me. Liability of the promoters remains. What this liability talks about, say I'm the company, I'm the owner of a company, I'm the director of a company. So my company will be sold through the insolvency proceedings, right? But the owners or the liability, whatever I have, whatever the liability is there on the director of a company, that will not be removed, right? So as you know that the corporate entity is separate from the director of a company. So my liability, the liability of a company and the director is something different, right? So director will not be revived. Whatever the owners of the director is there, it will stay as it is. Enabling successful takeovers, immunity ensures buyer can invest without inheriting unresolved legal baggage as seen in Tata Steel acquisition of Bhushan Steel. So this is one of the case study I'll talk about. I'll just show in the slides to come. Career opportunities for insolvency and bankruptcy. So, as I said, there are in India around 4,500 insolvency professionals are there. And in order to qualify this exam, there are two routes actually. One, limited insolvency exam. For that, you need to be a chartered accountant, cost accountant, or CMA or a LLB. And you need to have 10 years of experience. Only then you should be able to sit for the exam. That is one route. Second route is that postgraduate insolvency program, PGIP program, which is a 2 year course actually, which you can pursue this course after qualifying a chartered account, after qualifying your chartered accountancy or cost or advocate or BTech or MBA. And there is a restriction on the age limit. Your age cannot be more than 28 years, right? It's a 2 years course. What will happen if you become an insolvency professional? You can work as an uh, you can work with the bankers, you can work with the ARCs, asset reconstruction companies, you can verify the claim, you can work as a financial analyst, consulting with IP firms, etc. Banking and stressed asset teams. You can work with the bankers, stressed asset teams, etc. This is a case of Go First Airways, as I said. So the company went into corporate insolvency resolution proceedings in 2023. What happened? The lessors of the flight wanted to take back their flights, right? But again, the moratorium was in place. So the process does not allow the the company any legal battle to take place during the moratorium. So the lessors who leased their flights to this company did not get a chance to take away their flights, because think about a situation. If I'm running a flight company, say like First Airways, if the lessors take away the flight, the company cannot survive. The company cannot survive, right? So the honorable NCLT did not allow the lessors to take away their flights, and there was certain restriction. And what happened? The expression of interest was placed before the buyers, before the investors. But again, the plan which they received did not excite the creator of the company or the committee of creators of the company. Hence, the company went into liquidation. What happens when a company goes into liquidation? When a company goes into liquidation, the assets of the company get sold on through e-auction basis, and the investors or the bankers get their money once they sell off the assets. One more example I would like to give actually. This is a recent example of Bhushan Steel. Bhushan Steel uh, was acquired by Jindal Steel, right? The Bhushan Steel went into corporate insolvency resolution process in 2017, and this company was acquired by Jindal Steel in 2019. So, as I said, in order to uh, purchase a company, the acquirer has to submit the resolution plan. So, likewise, Bhushan Steel had submitted the resolution plan of around 19,500 crore rupees, right? The plan was submitted, and in the plan, they had submitted that the plan will be implemented over a period of 1 year, right? What was the implementation procedure? As I said, it's a long blueprint how the company will function in the years to come. So Bhushan still did not implement their plan, what they had mentioned in their resolution plan, right? So what happens? There were a lot of delays, a lot of issues with the implementation of the plan. So what happened? Uh, Say, for example, one flawless or loophole was from the resolution professional. As I said, that the CRP process is required to be completed within a period of 180 days. But that did not get over within a period of 180 days. So uh, you need to file an application before the Honorable NCLT for an extension. So that application was not filed by the resolution professional or the insolvency professional before the Honorable NCLT. That was one of the loopholes. Again, as per Section 32A and Section 29A of the Insolvency and Bankruptcy Code, certain checks are there, certain compliances are there. Say, being a buyer, if a buyer is coming, so certain checks are required to be done, right? So that check was not done by the resolution professional. Hence, and after that, the resolution plan was approved by the Honorable NCLT in 2019, but in after a period of over 5 years, Bhushan still did not implement the resolution plan, was not able to implement the resolution plan. So it is a recent judgment of the Supreme Court in May 2025. After 5 years uh, of approval of the resolution plan by the NCLT, they reversed their order. What did they do? They took this company to the liquidation. So what happens when a company goes into liquidation? Bhushan still has already paid their amount. of 19,500 crore rupees, number one. Number two, the bankers or the creditors have already got their money out of 19,500 rupees, 19,500 crore rupees, right? And Bhushan still is taking care of the business. They are running the business. They are making profit. Their books of accounts are being maintained. They have employees in the organization. But after 5 years, Bhushan still was asked to leave this company, and the insolvency professional was ordered to take this company into liquidation. So, friends, just think about a situation. The company is already running, right? If the company goes into liquidation, the entire employment, you would see around 34,000 employees are there in this Bhushan still who are earning their livelihood through this company. What will happen if the company goes into liquidation? The business will lose. It will be a loss for the economy. They will lose their jobs, the employees, and they'll not be able to survive, right? So what happens? Again, an application was filed by Jindal Steel in June 2025 before the Supreme Court just to take care of their verdict, the verdict which they passed in May 2025. So currently, this case is under consideration in Supreme Court, right? Supreme Court is thinking just to revive the order passed by the Honorable Supreme Court in May 2005 and just not to take this company into liquidation. Otherwise, if a company goes into liquidation, the economy will be at a toss, right? The business will be at a toss. The GDP will be at a toss. So, our every intent will be to revive the company rather than take this company into liquidation. All right. So, this as I talk about the CRP process, right? I'll touch some portion of the liquidation. As I said, when liquidation take place, in order to take this company into liquidation, the first step is to take this company into corporate insolvency resolution process. That is step one. If you are unable to revive this company through CRP proceeding, then you can take this company to the liquidation. So, to take this company under liquidation, you need to file an application before the Honorable NCLT with the approval of the Committee of Creditors, right? And in order to take this company into liquidation, you need 66% of the voting share, voting right. A voting has to be there by the Committee of Creditors. Once the committee votes, and the vote has to be with 66% at least. If the committee says, okay, take this company to the liquidation, only this company will go into liquidation, right? So think about a situation that the committee has approved a company, a corporate data, to take into liquidation with 66% voting. So an application has been filed with the Honorable NCLT. Now NCLT will admit this case and appoint an insolvency professional like us, right, to become the liquidator of a company. What will happen when we become the liquidator of a company? So once we become the liquidator of a company, as I said, the custody, the power, and everything rests with a liquidator. We become the post de facto CEO of that company, right? Our intent or our function would be to sell the company as a going concern. If you're able to sell the company as a going concern during liquidation, it's good enough. If we are unable to sell the company as a going concern, we need to ask for the bid from the prospective buyer. So how this auction will take place? If I talk about pre-IBC period, this auction used to take place through physical mode. An auctioneer used to take place on a stage and he used to call for the bid. Ye bataiye, I'm going to sell this company. These are the assets, how much you are willing to pay. But a lot of loopholes or the issues, malicious intention of the liquidator or the corporate debtor used to take place. Hence, this IBBI, Insolvency and Bankruptcy Code, has mandated it to conduct the auction through e-auction process only, where one buyer will not be able to see another buyer, right? And you can submit your bid through online mode only. You will get a respective code to log in to the online portal and you can submit your code. Once we are able to liquidate the company, we are able to sell the assets of the corporate data, then we need to pay off the debt of the creditors. What will happen once the company goes into once this e-auction process is done? The next step is dissolution. As we are unable to sell this company as a going concern, as we've already sold out the assets of the corporate data through e-auction process, now the company will go into dissolution. Because if nothing exists, so it's of no use. It doesn't make any sense to run the company, right? So an application will be required to be filed before the honorable NCLT to approve to dissolve the company, right? So this is another process. So once the dissolution of approval is passed by the honorable NCLT, the company will be dissolved. Friends, I talk about this corporate insolvency resolution process about the companies, right? But again, if a company is taking loan from a banker, from a bank or an operational creditor, so there has to be some guarantor. As we all know, whether a company is going to take loan or if you are going to take loan. So nowadays, what the banking industry or the bankers are asking for, they're asking for a guarantor. So in order to give loan to a company, the banker will ask for a guarantor. And who can become a guarantor? The director of a company. The director of the company has to give guarantee. How they can give guarantee? A guarantee has to be collateral in nature, right? Because if a company, if a banker or the IP insolvency professional is unable to recover money from the corporate data or selling the corporate data, then he has all the right to invoke his guarantee against the director of a corporate data. Say, for example, uh, there is a loan of, I'll take small example actually, small amount, 200 crore rupees. Out of this 200 crore rupees, say 100 crore has been revived through selling this company. Again, 100 crores left, right? What the bankers will do, they will invoke this guarantee and they will try to recover this money from the directors of the corporate data, directors or the guarantors. A guarantor can be anyone actually, but mostly the directors become the guarantor of a company. So a personal insolvency case will run against the director of a company, right? Under section 94, section 95 of the Insolvency and Bankruptcy Code. What will happen when a personal insolvency case runs against the director of a company? Again, a resolution professional will be appointed by the Honorable NCLT, National Company Law Tribunal, and he will become he will take the charge of the corporate data. I mean, the director of a company, right? So, what will happen? He need to resolution professional is required to sit with the director of a company, and a director is required to submit a plan. Say, for example, there is a loan of 100 crores left, right? A director will say, sir, out of this 100 crore, I should be able to pay 40 crore rupees. There is nothing called binding that he has to pay 100 crore rupees. He says that I'm unable to pay 100 crore rupees. So I should be able to pay this 40 crore rupees. So how this 40 crore will be paid? By the director of a company or the guarantor of a company. So a plan has to be there, right? Within a period of say 6 months or maybe 8 months or maybe 1 year, this amount will be paid to the resolution professional. And if he says, sir, I'm unable to pay, and whatever, if he says that 40 crore he is able to pay, but the committee of creditors or the bankers says, no, there is a payable of 100 crore, I want 100 crore only, 40 crore will not work for me, then what will happen? Again, an application will be filed under section 114, 115 before the Honorable NCLT, and this director, the guarantor, will be taken into the route of bankruptcy. I repeat, this route will go through the bankruptcy proceeding. What will happen once this bankruptcy proceeding takes place? Now, not the company, the assets of the guarantor or the assets of the director will be taken over by the liquidator or the insolvency professional. We call it bankruptcy trustee now, right? So, friend, there are a couple of roles for an IP. During a CIP proceeding, he become first IRP, insolvency resolution process. Then he become the resolution professional. During liquidation, he become the liquidator. During personal insolvency, he become the resolution professional. During bankruptcy, he become the bankruptcy trustee. So one degree, but there are certain roles based on the cases, right? So once the corporate guarantor goes into bankruptcy, an insolvency professional will take custody of his assets and he will sell off those assets. Likewise, he was doing during the liquidation proceedings of the corporate debtor. Now he will sell off the assets of the corporate guarantor or the director of a company through e-auction mode. And post recovery, he will pay off the uh, debt to the bankers or the creditors. Right. So this is the process of personal insolvency. As I said, I'll just take a pause just a sec. All right. So we spoke about corporate insolvency resolution process. We spoke about liquidation. We covered personal insolvency. We covered bankruptcy. Now we are going to cover voluntary liquidation. I have a business. I have a company. If I'm unable to function the company, say for example, it's been 10 years or maybe 2 years, but the intent what I had while I started the company, that did not meet. I'm unable to run the company. I'm unable to make profit. Say for example, any XYZ reason, right? The directors or the partners are not doing well. So in that case, we can dissolve the company. We can take this company through voluntary liquidation. Voluntary liquidation is a process wherein the director of a company can't dissolve the company through insolvency and bankruptcy route, right? But again, there are certain conditions. There are certain conditions for voluntary liquidation. You would find a lot of shell companies are there, who were registered 20, 25 years back, and they are just for the sake of their name, they exist in the market, but they do not function. In order to run a company or in order to keep a company active or alive, a lot of compliances are required to be followed, right? MCA, Ministry of Corporate Affairs, ROC compliances are there, annual return filing, etc. A lot of compliances are there. But if I see that the company is not making sense, it's not making any sense for me to keep the company, I can dissolve the company through voluntary liquidation processing. So there are certain criteria, friends, to dissolve this company. The route is very simple. First, there has there should not be any default. There should not be any payable of a company of any of the claimant or the creditor. Number one. Number two, if there is a claim or if there is a payable, I should have sufficient cash flow to pay off their claim. I repeat, there are certain criteria. First criteria, there should not be any payable, any creditors in the books of account. And if I see that there are creditors in the books of account, and then I should have sufficient cash flow to meet those financials, to meet those claims, right? Only then I can go through IBC route, right? So what happens? I need to make a plan actually. I need to value the company. Valuation is required. So within the period of 90 days, I need to value the company. I need to get it valued. And again, an insolvency professional will be appointed here. He will take care of the company. He will, after making a plan, this is the route map. Through this mode, I want to liquidate this company. Once this plan is there, say for example, there are payable, there are assets, how I'm going to sell off these assets, through what mode, e-auction process, what is the valuation, how much I can get. A report is required to be prepared, and that report is required to be filed with the Honorable NCLT, National Company Law Tribunal, adjudicating authority, right? So a company can be liquidated with the approval of an AA, adjudicating authority, or national company law tribunal only. If they say no, you cannot liquidate this company, then that company cannot be liquidated, right? This is this we covered about voluntary liquidation. I think I have covered a lot of things actually. It will be great if you can just start the question answer session actually. Madam? Madam, can we start the question answer session?
So just a minute.
Sure.
So am I audible to you?
Yes, madam.
Yeah, sir. Sure, sir. Okay. Sir, if you can see, the question I was about to ask is generally because while we are teaching this particular paper
Yeah.
on financial markets, banking, and financial institutions,
Hmm.
what happens is very simple. I am facing issues on understanding what exactly do we mean about directors' personal property being attached to conflict
Okay.
So that's what I was asking.
Okay. What happens during this when a bankers lend a loan to any of the corporate debtor? So
दोनों
bankers
जगह
can,
बोला ना एक तो बस
yeah, when a bankers lend loan to any of the corporate debtor, right? A loan cannot be disbursed without taking guarantee nowadays. A banker has to go through a lot of formalities, as we all know, because these are the corporate loan, and loan amount are of huge amount, right? So they will go through the books of account, what is the status of a company, what is the prospect of a company, how much revenue the company is making, and the, how much revenue the company is making, and they will also see the future prospect. As we all understand, a corporate data has to submit a CMA report. What is CMA report? A projection, say 3 years or 5 years, how my company will go, right? The profit structure, the turnover, what is the plan? What will I do with this money once this loan is granted? What will I do with this money? That is number one. Number two, bank always asks for a guarantor. Guarantor are mostly the director of a company, director or partner. So, and it has to be collateral. So once this guarantee is there, so one form is required to be filed with the ROC, Register of Companies, which is called CHG1. So once this charge is filed, the the property of the director is also attached, right? So a bank has all the right to sell off the assets or the property of a guarantor or a corporate debtor once they are unable to pay off their default amount. So bank cannot sell it themselves. Under IBC, bank has to take this process through the insolvency and bankruptcy code only, and they need to file an application before the honorable NCLT, and we will get appointed as an insolvency professional. So we can work on behalf of a banker. We can sell the assets, right? And we can pay back to the banker. So this is a process.
So again, I can sell the assets and the amount proceeds can be given back to the bank. While I understand this, I again ask in a practical manner, there is a how do we draw the line? Like, what are the properties of directors that can be sold at all? Of course, we can't sell I assume we can't sell the director's car. Can we do that?
Okay. So first of all, we need to check actually which all are assets, which are registered in the name of a director, right? A director may have multiple cars, director's brother or sister or maybe spouse may have multiple cars, right? But what we need to check, we need to trace out this property. Say for example, a flat is there in Salt Lake or maybe at Tollygunge, whether that flat is registered in the name of the director or not. If you see that that flat is registered in the name of a director and this property belongs to the director, we can obviously take the custody of that property and sell it off.
No, I understand this, but is it practically also possible that the directors will, in order to avoid this, can they often register their costlier property, as in the ones which are really expensive,
Hmm.
in the names of their family members? Let's say maybe they register it in the names of their son-in-law or daughter-in-law. Is this practical? Is this something that happens very frequently?
This is the practice in market, I must tell you actually, because what happens at the time of taking loan from a bank, a director would say that these are the properties I have, and but again, this is the practice actually, because while they buy a flat or maybe a building or a apartment, they would register in the name of their spouse or in the name of their child, right? But they have an intent actually that I'll take a loan from the bank and after 5 years down the line I'm going to default. So this practice is very much in place actually in market. But again, we need to understand, if the property is not registered in the name of the director, we have no right to take that property. And again, as I said, that insolvency, personal insolvency of a director can take place under section 94 or 95 of the Insolvency and Bankruptcy Code. But there are certain restrictions. Say, for example, if a director earns 2 lakh rupees on a monthly basis as a director's remuneration, or maybe he has certain FD in the bank account, and from that FD he's earning certain interest, right? So if his monthly income is, he's earning on a monthly basis 2 lakh rupees. And my debt is of 10 crore rupees. He'll not be able to pay off that debt, right? So as I said, that a resolution plan is required to be prepared by a director. And that is required to be submitted under section 106 of the Insolvency and Bankruptcy Code. But out of this 2 lakh rupees, there are certain exceptions which are laid down in the code. Say, for example, he has to run his livelihood, daily needs, bread and butter, right? Medical expenses, education expenses of his or her children. So certain restrictions are there, excluded assets are there. Out of this 2 lakh, these assets are required to be excluded. Say, for example, if ornament, if a director has ornament, obviously she should have certain ornament. So if he or she has ornaments worth a value of 10 lakh rupees, right? So 1 lakh rupees is excluded. He can keep ornament worth 1 lakh rupees and we can take 9 lakh rupees. That's what the process is. I
Uh,
should, yeah,
Yeah, so that is, of course, I did realize this problem from practice itself, which is why I asked this question.
yeah.
Acha, again, I understand I'm the only one asking questions, but I have certain queries here.
I
So
would love to take your question, madam. Yeah,
yeah, thank you so much, sir. So again, there is, I believe, a form of insurance which directors can take to protect their assets, which is keyman insurance, right? Is that not active? This is Keyman Insurance provides security against litigation expenses, if I'm not wrong.
correct.
Uh, so does this not apply in this particular case?
Okay, so he can take the insurance, but the thing is that you are saying from the protection point of view, right? Say there is a debt.
Yeah, because let's say if I'm a company director, and
Yeah,
let's say if I am an independent director, which is even more difficult,
yeah.
and my company is overburdened with loans, and we can see whether the company is going to survive within, let's say, I can foresee the future of the company at least for 3 years in advance, if I'm not very wrong.
Hmm, hmm.
So, in the meantime, can I effectively take this form of insurance and save myself? Is it possible?
You can take the insurance, but for example, there is a debt or default of 10 crore rupees, right? You have taken an insurance of 2 crore rupees. My insurance or the insurance company is taking care of 2 crore rupees, right? Again, 8 crore is left. So in that case, 8 crore, the banker has to recover his or her money, right? Their money. So they can obviously take this director through the insolvency route and they can recover. Because at the end of the day, what the bankers want, they want 10 crore of rupees.
So 10 crore of rupees. Acha. Also, this is not in respect to insolvency code, but in case of smaller loans, we often see that banks rely on debt collectors, which is a very, I think RBI has stopped allowing certain banks to appoint debt collectors, if I'm not wrong.
Yeah.
So, is this something that the directors may also face? Can they expect that from some debt collector on their door asking for money or threatening public ruination in case they don't come up with the money? Is this something that they also face?
Look, the thing is that obviously this is legal in place, and again, there are debt recovery agencies are there in market. So what happens? See, for example, I'm a banker. I'm State Bank of India, right? And what I'll do, say for example, Ram has taken a loan of 2 crore rupees or maybe 3 crore rupees, and Ram is unable to pay the loan. So I'll give them a call. I'll give them reminder. I'll take this company into NCLT route or maybe other DRT route, debt recovery tribunal. But again, what will happen if I'm unable to recover? I don't have bandwidth to follow with this director. I'll assign this loan to some other agencies on a commission basis, on a percentage basis. Say, for example, look, there is a loan of 1 crore rupees. Chalo, theek hai. Once you recover this amount, I'll give you a success fee of 10% or maybe 20%. So obviously, there are certain agencies, certain company in the market who does this kind of work. So it's very much legal actually.
Okay. And so, because you mentioned this as well, then what is the role of asset management companies? If banks can by themselves take all this money
Yeah.
from whatever firm, then what will the asset management sorry, not asset management, ARCs, I meant asset recovery companies, whatever you have, or asset reconstruction companies, what will they do? How will they earn?
So what happens, nowadays, being nationalized bank or the scheduled bank or the private bank, say there are certain NPA. So at the end of a financial year, I cannot show huge amount of NPAs in my books. That will impact my books of account, right? So what happens if I see that this this corporate data or maybe 100 corporate data are there, 100 bad loans are there, right? I cannot write it off. So if I carry forward this case or if I carry forward this case, say for 2 years, 4 years, and if I see that it is not resulting into recovery, what I'll do, there is a loan of 10,000 crore rupees, right? I'll just sell those loan to a ARC, asset reconstruction companies, at say 8,000 crore rupees. So how does this benefit to a bank? This benefit to a bank, they don't need to go for a longer follow up. Their money is realized, 80% of their money is realized by the ARC. I've just given an example with relating to the number 8,000 crore and 10,000 crore rupees. So the entire debt of a scheduled bank, of State Bank of India, say for example, is assigned to ARC. So State Bank of India will write off this loan from its books of account after collecting 8,000 crore rupees from the ARCs. So it's not in their books and their book is clean. Now it's with the ARC how they are going to recover this money from the corporate data. It's their headache, right? And in between, if they're able to recover that money, it's their business. They're able to run the business, and a lot of ARCs are there in the market who does this kind of work actually. They buy the loan from the banks, and they say they give certain upfront payment to the bank. It depends upon the commercial terms and agreement actually between ARCs and the bank. And at the end of the day, agreement takes place between both the parties so that they can work with the recovery part.
Thank you, sir. So in terms of, I don't think the students have asked
Your
any.
voice is very low, madam. If you can just a bit louder.
Yes, sir. So I don't think the students have any particular questions because we have not yet asked, we have not received any particular questions. However, I think my departmental members had questions which I have already asked to you. And so, sir, again, this has brought us to an end of the session. Is there anything else you'd like to share regarding how students can look forward to this particular professional field, what they can do in order to ensure that they will get uh, they will carve out a niche for themselves in this particular field? Is there something you would share while we are ending the session, sir?
Yeah, obviously, a final message for the student actually. They are the bright future of our country and they are going to rock in the years to come. So, insolvency professional is a good field actually. So, what happens? This field is very challenging and very rewarding. As I said, you can become the post de facto CEO of the company. You can become the chairman of a company. So all the reportees, all the managers, and all the leadership role will rest on you actually. Because if you take the position of Mukesh Ambani, you can understand what it can and how much responsibility do you get. So this is a good field actually. In and though there are two ways you can become an insolvency professional. One, limited insolvency examination which you need to appear, but again that's too long for you. I would not guide you because you need 10 years of post qualification experience after qualifying your chartered accountant, CA, CS, CMA, or LLB. But you can go through the PGIP route, postgraduate insolvency professional route. So it's a 2 year program actually, and it which is organized by IICA, Indian Institute of Corporate Affairs, Delhi. And there are limited seats actually. On a yearly basis there are 50 seats only, and the course fees would be around 15-16 lakh. Though I'm not authorized to talk about all this course fee, but again, just thought to share the things which I know actually. For that, it can help you people to understand. Number one. Number two, say for example, if you have a business, if your dad has a business, and if you want to buy a company through insolvency route, this is a good opportunity for you. There is a 20 years old company. A company has its credentials in the market, and you're building a company from the trash, right? You're not required. So once you acquire this company, you can run this company. This is the goodwill of a company, credential of a company. So this is another thing which you can think about, right? So that's all from my end. In case student want to get in touch with me, or maybe the management want to get in touch with me in the days to come for any sort of queries they may have, I should be able to answer to their queries actually.
Thank you so much, sir. You have given us enough time. I think we shall now stop the session. Good morning, everyone who is present here. It is indeed an honor and a privilege to deliver the vote of thanks for today's enlightening seminar on insolvency and bankruptcy court. The session has not only enhanced our academic knowledge, but also offered us practical insights into a subject of immense relevance in today's economic and corporate landscape. First and foremost, I extend our deepest gratitude to our esteemed speaker, CMA Sandeep Singh, for graciously accepting our invitation and for delivering such a compelling and insightful lecture. Sir, your ability to explain such a technical and complex subject with clarity, real world examples, and professional depth has truly captivated us. Your experience as a cost and management accountant has added tremendous value to this seminar, and we are sincerely grateful for the knowledge and perspectives you have shared with us today. Thank you, sir, for taking the time to be with us and for inspiring us to delve deeper into this crucial area of financial and legal reform. I would also like to express our sincere thanks to our respected Father Vice Principal for his continued support and guidance. Sir, again, your presence and encouragement are a constant source of motivation for all of us. Your commitment to academic excellence and holistic development continues to shape our learning environment and make events like this possible, Father. So again, thank you so much. To our dedicated faculty members, thank you for your involvement, encouragement, and for always assisting the students towards meaningful academic pursuits. Your role in fostering curiosity and intellectual engagement among students is invaluable, and today's seminar stands as a testament to it. A heartfelt thank you goes out to all the students who have joined us today. I understand it's a Saturday. I understand it's very early in the morning, but thank you so much. Your enthusiastic participation, attentiveness, and curiosity truly contribute to the success of the session. We hope today's seminar has sparked a deeper interest in the field and encouraged you to explore the subject further in your academic and professional journey. If any student wishes to contact Sir, please do let me know. Of course, you do have his uh, details up on the poster, but in case you do need to contact it, I'm sure Sir will be very open to encouraging and entertaining your queries. Please do feel free to reach out to Sir. We are also deeply grateful to our technical and support staff who work diligently behind the scenes to ensure that everything runs smoothly, from audiovisual arrangements and logistical support. Without your quite yet crucial efforts, today's session would not have been as seamless and impactful as it was. Thank you. So again, in conclusion, it is my pleasure to thank all of you once again, our speaker, dignitaries, faculty, students, as well as staff, for making the seminar a meaningful and successful academic event. Let us carry forward the insights gained today and continue engaging in thoughtful discussions that bridge theory with practice. Thank you so much, sir, and have a wonderful day ahead. Sir, thank you so much for joining. I now have certain instructions for the students. So if you wish to log out, sir, thank you so
Yeah,
much.
thank you so much. Good day, everyone.
Thank you, sir. Okay, for the students, you can see the attendance in your chat box, and you have also received the link via LMS. The link shall be closing exactly sharp at 9. So please do finish off your attendance. Please fill up the Google form provided to you in the YouTube comment section as well as your LMS portal by 9 a.m., which is exactly when I shall be closing the form. Thank you so much, students. We end here.